How are you? Oh no, recording in progress.
Yes, it is. And the market just opened.
Dun 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 dun.
Oh, New York. It's 9:30.
Is that is my background read correct?
Morning.
Ooh, Georgia's got a background now.
Nice background, George.
Hey
Thanks.
George, I think it'd be really cool if everyone did if we could put a bio together for everyone, so we know who all these people are.
I know who all these people are.
I don't know who they are though, George.
Evidently, you need to do more networking.
Apparently, I do. I mean, I'm a little slow.
By the way, this is going to be a recorded meeting, and I've been asked by a couple of people to put it on my YouTube channel. So we'll see. Anyway, just FYI. So good morning. Well, Mike, I didn't mean to shut you down, buddy.
Oh, you did it. I can't tell you what I'm doing right now.
I'm glad you have your camera off. Excellent. God, come on. Yeah, we'll wait till a few others get on. Aaron is not going to be with us in the early part of the meeting. He's going to join us a little bit later. And then I'm going to do the market report because, well, I'm
Where's
just
Patty?
so I got, and Fred's on the call. Thank you, Fred. Fred, it's 6:30 there.
Yeah, 6:30 here.
Yeah, man. Well, it is sunlight outside.
A little bit.
Yes. Well, I think we may have a dry day today here in Columbia, which would be nice.
Finally.
We've had rain for the last number of days. Right, Demetrio?
Yes. Yeah. I know the people with college students tomorrow hoping for a dry day.
Oh, is college? Oh, is USC moving in?
Yeah. Moving days tomorrow.
Oh,
Yeah, that'll be crazy. You don't want to really be in the traffic too much around the campus over the weekend.
Yeah. You can already see it picking up as of Thursday. I was like, wow. Yep. They're back.
Yes. So Patty's not going to join us either. She's got her mom this morning. So anyway, for what that's worth. So yeah, sort of just lay out the call. I'm going to do the market report, and then we're going to get into Fred talking a little bit about his upcoming webinar. So why not go ahead and just get started and just give you a couple ideas about what's going on with the market. So it's sort of an up and down week. Monday, it kind of there was some data out that's made the market slip a little bit. But then Tuesday, it rallied with the CPI coming out better than expected. And so it took off pretty nicely Tuesday. And Wednesday, that optimism continued on. And then Thursday happened with the PPI came out, was hotter than expected. And that caused the market to pull back and the Dow fell a couple hundred points, and S&P was off, and as well as Nasdaq. So those kind of just impacted the entire market, and then and also impacted the outlook for the Fed decision. So that was kind of interesting, and the optimism for a cut in September was kind of boosted by the CPI. And then when the PPI came out, it sort of put some water, dampened that enthusiasm for a projected rate cut of 25 to 50 basis points. And so the optimism went from like 90 4% to down to 90, a little less than 90%. So basically, we don't know what the Fed's going to do. I think there's another CPI and another PPI coming out before the Fed meeting, and I think those will decide kind of what the Fed rate might be. Anybody else want to take a stab at that? Anybody else watching that market or anybody care?
No, we need to know the astrological sign, though. I mean, is
Oh
like
man, Patty's
is
not here to
Jupiter
do
in
those.
Saturn or something, or
Oh man, but
maybe
you're
it's
right, Mike.
retrograde. Sorry.
No, that's fine. The other thing that I did want to get some input from was um, Trump made an agreement with NVIDIA and AMD to for those two companies to give the government 15% of the profits from the sales of their chips to China. And I thought it was an interesting move. Let me just put it that way. Then Intel, the chip maker Intel, it looks like they may get in bid with the government as well. So does anybody want to take their take on what that 15% is?
I don't have a real take on that, but I was definitely reading into it, and I was just trying to get everything to state. So Trump said that the U.S. can or Nvidia can sell these chips to China, but in retrospect, that they're going to be paying us all this revenue based on how much China's purchasing. So they're like, fine, China can buy all this, but we're just going to make that much more money. Am I reading that right?
We meaning why would that impact what we sell it for? I mean, they're probably going to sell it to
It's
us the
not.
same
America's
price
just
they.
getting a ton of revenue.
Yeah, that's what I'm thinking.
Yeah, that's crazy. That's a lot of money. And I had a secondary thought on that, but as soon as I started thinking about it, it left my head.
Anybody know what the Intel news is?
Oh, I don't know the Intel
Yeah.
news. But after that deal struck, didn't Apple come up with like they said they were going to invest like 600 billion
Yes.
in American
600 billion.
infrastructure, and it started trigger. I think Intel is kind of along those same lines. I'm not sure the figures, but all these data companies or chip companies are, you know, they don't want to lose out to NVIDIA. Now they're all coming to America and investing hundreds of billions.
Well, I'd heard that China basically put out a memo to the companies that need those chips just to not bother with them. So maybe just not buy. So maybe the deal got killed. But anyway, we'll watch that. That's going to be an ongoing shift in the landscape, and I think it's going to be interesting. So we'll see how it pans.
George, there was something I think in the TLDR newsletter stating that the China chips they couldn't compete with the NVIDIA chips that for DeepSeek. DeepSeek was having some problems, and they had to switch back to some NVIDIA chips. You know, I mean, DeepSeek was built on the Huawei chips,
Right.
and they were having some problems with it. I don't understand. I mean, it was something to do with latency or something. I don't know.
Yeah.
So
I've heard that NVIDIA chip is better than the Huawei chip.
yeah,
That's why they want it. But Huawei and the Chinese government are putting a lot of money into the research to develop those chips to make them comparable to NVIDIA. So
probably still the chip manufacturing process.
anyway, I thought those are kind of interesting developments, and we'll just keep an eye on that. So anybody, Jordan, do you want to just tell us what the heck happened yesterday? Why Bitcoin fell, or I mean, man, we were so flying high this week. You want to take it for a second, just sort of off the cuff?
Yeah, I don't mind talking about Bitcoin. I'm just kind of looking, say it fell off yesterday. I'm sitting here on TradingView, kind of looking at some charts. You know, I wish I could share my screen. I've been charting on like candlesticks, uh, It's like 2015,
Let me
2016.
see.
I started getting into it. And do you hear me okay? I'm on these
Yeah.
new headphones, but they're really nice. I think I hear everybody else really well. But I have this channel drawn here, and it really just dropped and retested the top of this channel. I
think
would
you
be
can.
buying.
I think you
I
can
would be
do,
kind of
Linda.
curious what
Sarah
the
Jane
weekend
shared
has.
hers. Sarah Jane shared hers last week or the week before. So you might be able to.
I'd have to play with it. I'll play with it
Okay.
another time. I don't want to sit here. I know we're on a time scale. Tech is always weird. I'll end up doing something weird.
Okay.
Um, but looking at this channel, and this channel kind of ranges from like 118 to 108. We've really been in this slight down part of the channel, but we broke above the channel and are retesting the top of it. The price did not break back into the channel, so it's kind of tough on the weekend. I never know what the weekend prices are going to do. They're kind of different from the in the week process, but yeah,
Okay.
this is kind of week where I wouldn't be able to say if I think it's going up and down. You got to watch this next week, and if it starts going up, we could probably break up into some real new all-time highs. My highs for October were 160K. I think by October, I think those are the areas that we're
Wow.
going to be in.
God.
But at the same time,
Yeah.
I've been watching charts for so long that I draw out both ways. If something happens, on the negative side and it started going down, the EMA is at 100K. It retests the 100K floor. It's totally plausible. People think it's the end of the world on an 18K move. That's kind of funny to think about. But I mean, there's so much going on. But one I know yesterday was that I was talking to my friend about is I think in the long term, say in 10, 15 years, I think that the people that are buying into these asset companies are going to be biting themselves, kicking themselves in the butt in 15 to 20 years that they were buying and trusting these companies to hold these amazing assets that we're creating. And instead of buying the asset itself, they're investing in all. You want to be buying Bitcoin. You want to be buying ETH. You want to be buying Solana. And if you can't get it figured out, there's a bajillion YouTube channels. There's 1,000 people around you that are getting more into it. You'll get into the community and learn how to do it. And then they're like, oh, but what if we lose it? And I'm like, well, what if you hold on to it for 15 to 20 years and think you're rich, and then you go to recover it, and the company says sorry, or some stupid modern stuff. I don't know what it's going to be,
Yes, like letting
and
somebody else hold your keys.
because now when you get on it, these people are talking more. They're pushing more and more and more. The thing to do today is to invest in these treasury asset companies. And now you're hearing more about ETH. I'm hearing rumors of Solana treasury companies. All these companies are stocking something, trying to boost their pockets, trying to get more of your money to help boost their pockets more. And we'll see how it rolls in 10, 15, 20 years. But my suggestion would be buy the asset itself. If they're so obsessed with it, you should be obsessed with it, and
Yeah.
figure it out. That was my conver. That was my other thing yesterday too. I also liked how Google Play said that they were going to non-custodial wallets, pretty much any non-KYC or self-custodial wallets they didn't want to have on their Play Store. They were going to get rid of all of that. And the backlash was so intense that they already came out again and said, just kidding.
Wow. I didn't know that. Interesting.
Yeah.
Okay. Well,
Hey, George, I can jump in for a second just on
sure.
Bitcoin's action yesterday. There are three big topics. One was inflation came in hotter, so expectations for a rate cut were a little bit muted. Two, the Senate said that they would not be buying anything more for the Bitcoin Strategic Reserve. They'd just be holding what they confiscated.
Who said
Those
that?
were two for the negative. One for the positive was Jack Dorsey unveiled a new Bitcoin miner that looks like a game changer on the operational side, which is one of the few realms where Bitcoin miners have to like be more efficient is the name of the game because chip size probably won't be getting much smaller. We've gone from 50 nanometers to 2. And the
I
efficiency is
put
going to be up, but I don't know how much further we can go. Of course, the energy that you use, clean energy is the cheapest source, so that's the other game. So operational, and we can talk more about what the miner actually does later if you'd like. But those are probably the three big topics that affected Bitcoin.
That
Interesting.
mining rig was super cool. I was kind of looking into it. Apparently, you can completely take it apart and upgrade, individual pieces. They say within 60 seconds. It sounds like
Yeah. Yeah, sure.
that
I guess
thing
we can
swap
get
out.
into it for a little bit right now. So, like
Yeah.
right now, if your miner has any problems, like if the fan burns out or the chipboard burns out or something, you have to take your whole rig offline and then repair it either there or send it in for repairs. And that could take
It's
weeks.
death
Bitmain
sentence
is
almost.
terrible if you send it to their repair center. It's a real pain in the butt. That's why larger companies have their own internal repair centers on site usually. But so with this thing, it's a form factor change. So the form factor kind of has, I think it's two rows of three circuit boards, which allows you to hot swap. So you don't have to take your rigs offline at all.
Mm.
You can just take one board off while the rest are earning money, and just work on that chipboard itself.
Interesting.
And obviously, as the chips change, they will change a little bit. You can swap out a chipboard and put a new one in there, assuming the power is consumption, the power usage is the same.
Mm.
Um, because right now, new machines, sometimes their form factor changes. So you think about shelf space, like this container can have, 1,000 rigs, but if the form factor doubles, then it's only 500. So then what does that do? You have to like take them all out and put new ones in. With this one, you'd just be swapping the chipboard. So it's
Yeah.
it's a game changer in terms of efficiency.
Interesting. Well,
Yeah.
uh, okay, let's do the wrap on both the crypto and the stock market. And I wanted to bring Fred into the conversation. Fred's joined us a number of times before, and he's now in California, so he's been gracious enough to jump up this morning and join us. And I was interested in a webinar that he's hosting on the 28th of um, this month. And so I'm going to turn it over to Fred and let him just give us a little quick oversight. And you might be interested in joining. I've signed up for it. My interest, if you give me a second, is in the processes that Fred's developing for manufacturing companies. And my interest is that our Richland One School District here has a number of assets, physical assets that are they don't have any idea what they've got. And so I'm hoping Fred can bring some light. Maybe this seminar will be, no, webinar will be along some of those lines. But that's my interest. And Fred, I'm going to turn it over to you and let you sort of take it for now.
Yeah, thanks, George. Yeah. As George was saying, my company is going to be putting on a webinar. Like our goal is to try and put on a webinar once a month now about AI. I think we work specifically in the area of AI for manufacturing, and that's what this month's webinar will be. It's just a general overview of what that looks like. I think it's a topic that gets discussed a lot. Is you can use AI to help work in logistics. You can use AI to help in manufacturing, but I think not a lot of people have a good idea of what that looks like, and I think that has created like a lot of confusion with especially manufacturers. They're very interested in being more efficient companies, more effective companies. So my background before I started Collide Technology was that I was the head of data science for a large pharmaceutical manufacturer, and so most of my career has been in working in manufacturing, specifically in machine learning and artificial intelligence. So we wanted to really put on a webinar that we felt would go through at a high level some of the topics, what AI really looks like in that space. I think in a lot of cases, most of the AI that people have a lot of experience with now is something like ChatGPT and LLM, where you can chat with it and it'll give you answers to things. And really, in the space of manufacturing, the world gets a lot richer. So we're going to talk about a couple of different, a lot of topics. We're not going to go into. It's not going to be a technical talk, which I'm glad George brought me on to clarify. For those of you who do know me, you may know me for putting on the Silicon Swamp meetup in Colombia, which is a very technical meetup. But in this case, we're just going to go through some of the use cases that I've personally seen work that I think work really well. And what that's mostly going to be is things like computer vision, where you use camera systems to check the quality of parts, predictive maintenance, where you try and figure out which machines are going to break before they break, anomaly detection, where you're trying to figure out where a machine is maybe operating in a way that it shouldn't, as well as some things like business automation, like how do you automate some of your work using AI, and finally, we'll talk a little bit. This is not inherently meant to be a sales pitch for Collide, which is my company. We'll talk a little bit about actual optimization, just because I think it's a field that's often overlooked. It's what my company works on normally, which is like, if you do have all of these machine learning entities running, how do you actually get, like, find an optimal pathway or make really good decisions with it? And that's kind of the focus of Collide. So that's going to be, like, on a high level, what we're going to focus on is just like a non-technical introduction, especially for people who work in factories, like, in giving some real world use cases on where AI can actually help, and in some places where I feel like it doesn't help. I think I've done this for about 10 years. There's sometimes about an expectation of results that is a little much. So it's just going to try and put it in that framework of, what does AI look like in a real factory? Where have real factories seen benefits? How do you roll one of these things out, and how do you get started on it? And we hope, originally this was sort of, done with the idea of South Carolina manufacturers in particular. As George knows, like, I'm very passionate about not just this space, but about supporting stuff in South Carolina. So we're really going to try and focus a little bit on what we've seen for South Carolina industry, and where we think things can help there. And we just hope a lot of people show up, learn something. Anybody's welcome. It's not just, if you're just interested,
Yeah.
you're more than welcome. As always, we're pretty open book over at Collide. But I think there's some questions. I mean, I'll go around.
Yeah. Paul's got a question.
Paul, go for it.
Yeah, hey Fred, thanks for that. I've seen some, chatter online, kind of around the vision, right? We're in this era of, I don't know, similar to the Industrial Revolution about 100 years ago, right? Where, machines came into the factories, automated a lot of jobs. Some people have been talking about kind of the vision for, Amazon and UPS and FedEx, and they're throwing out dates of, by 2030, Amazon, you order something from Amazon, a human might not touch it, right? From where it gets shipped, right, all the way getting processed through the facility, and then, delivered to your door, and who knows, a driverless car or something like that, or who knows what the future will hold. Is that realistic?
Yeah, I mean, I would say it's been realistic for a long time. I think people, again, a lot of the revolution in AI recently has just been that you can chat with it, and it's made it really, really approachable for people that are not necessarily data scientists. The work that I did pre-GPTs was very kind of mathematically intensive, but it was very much still the kind of work the manufacturers want. And I would say, since I've been in manufacturing, which has been about a decade now, there have been what are called lights out facilities. The lights out facility is a plant where there essentially are no humans, right? Where Fanuc runs one of these in Japan, and it makes sense that Fanuc would. Fanuc's a robotics company, and so in Japan, there are some factories that they literally they call them lights out facilities because there's no reason for lights to be on in the giant factory because there are no people walking around. And so you'll see giant 10,000 to 20,000 square meter factories that maybe only one or two people operate in, and they're usually just coming in to check stuff. And even some of the robots fix the other robots, and that's not recent, right? So the advent of lights out, probably the first facilities for that went up in 2014, 2015, even really predating high-end AI implementation. So I think that reality has been real for a while. I think that the newer tools that we've gotten in the last 4 or 5 years have maybe accelerated aspects of it, but that world's been coming for a while. And there's still going to be lots of manufacturing that I just don't think gets that makes that transition. I'll give a great example. The last company I worked at was called SHL Medical, and we owned our own robotics company that would build an automation lines for us in-house. And it was great. And we built really good automation lines, but it only made financial sense on the capital investment to do that. And we had a number for that. It was if you went above 5 million units. So if you started coming to us and saying, oh, I want 6 million units a year, we would start talking to you about a fully automated assembly line. And I would say maybe 50% of our customers just didn't do enough volume to justify the capital expense for putting in a fully automated assembly line. And I think and we were a pretty high volume manufacturer for a lot of people. I mean, for us, of the top 30 pharmaceutical companies, 27 did their products with us. And I would say maybe only 5 of them had an automated assembly line.
Okay. Well, all right, Fred. So I will put the link out for the webinar. And what kind of time? It's at 2 o'clock, I know, on the 28th. That's Eastern Standard Time or Eastern Daylight Time. Okay, you put it out there already.
I threw it in the chat
yeah.
for anybody who wants to join.
Okay, that'd be great. And we should allocate an hour for that.
Yeah, it's meant to be a tight introduction.
Yeah.
Just to get people excited. As you know, I'll go on and on if I don't give myself a tight time constraint.
Yes. It's the Silicon Swamp.
Okay. Fred, George, let me ask a question real quick, if I may. Fred, do you get any pushback, within the manufacturing arena of obviously, they've got to put their data into the cloud, to do this, don't they? I mean, and at that point, that's not their data anymore.
It's a topic I'll touch on. I think there's a lot of machine learning type model stuff that's not required. Right. I mean, I've installed lots of computer vision model things where we train models. All of that's done local. It's done on your camera system locally. A lot of forecasting models, anomaly detection models. They're small. I mean, these things run on Raspberry Pis, a lot of them.
Right. Those are small.
Yeah.
Sure.
And so there's, and I would say the majority of the real world impact that you'll see in manufacturing can be done with smaller models. Right. It's only when you start having to do things where I need a language model. And that's really just business automation. The cool thing, and one of the reasons I like factories, is that most of their economic output is not just paperwork. Right. And therefore, a lot of the value we can have in those spaces is stuff that doesn't require them to upload a bunch of their data and share it. We'll talk about like what a risk that is. And there are, and we, our company does sell this. There are ways to take fairly large models and deploy them locally with your data that also can avoid that if that's a huge concern. But I mean, factories are always really sensitive about their data. I always think that it's a little overblown because what am I going to do with a bunch of manufacturing data, a spreadsheet of your production over the last 5 minutes? It's only so interesting to a handful of people. But yeah, it's a concern that we're going to discuss a little bit, but there is a lot of ways that if you don't want the data shared, that at least in manufacturing environments, I think that's an achievable goal. And then there's ways to protect the data once it is up there.
Okay, that's
So, I
interesting.
mean, it's not unusual that they're going to be putting in their own GPU clusters at some point, or perhaps larger manufacturers are going to have their own sovereign AI data centers
Right, and I
associated with
mean,
them. Yeah.
don't forget these are factories. I mean, they have a huge capital expenditure already on heavy equipment. The idea
Right.
that they might need to put in a little cluster isn't a ridiculous, but of course, especially in manufacturing, they've got to see a real use case. And if your answer is just, well, now somebody doesn't fill out some paperwork, the answer a lot of these guys are going to say is, but I pay them to fill out the paperwork, right? I have a solution to that. That's not. We really want to focus on problems where I don't have a way of solving this. People aren't good at this, and I think there's a lot of really good solutions that are not how to replace people, that are not how to cut down on the number of people. It's really how do we take most factories' real problem is the people are swamped. How do we get this to a point where people are making better decisions, and the people that I pay to be here are getting more of their real work done, and not being inundated with like filling out manufacturing reports.
All right. Well, Fred, this topic is going to be held off till August the 28th at 2 o'clock Eastern Standard Time. And thank you so much. We going to shift to the topic of the day also, which is stable coins. And we've sort of crafted this as a two-part session. The beginning parts today, I have extended the call so that we can, I hope it'll extend. It says it's going to extend. Then we're going to get into this conversation a little bit. I've got Paul to introduce sort of the concept of stable coins and what it is, and going to recap the Genius Act, and then Patrick's going to take it for a few minutes in terms of who's going to benefit from this or who can make money on it. And so what I'd like to do is give Paul the floor and sort of craft what he's going to say and then say what he's going to say. So Paul, I'm going to turn it over to you, buddy.
Thanks, George. It was very timely. There was a course that hit my inbox. I don't know if anybody is familiar with Rick Edelman. Rick Edelman owned a company called Edelman Financial Engine. Spends quite a bit of time on. He was a financial advisor. He built an advisory firm. He sold that firm. I actually know someone local here that worked for him when he was up in Maryland. But Rick is big with DACFP, which is Digital Asset Certified Financial Planner. I shared the link, but there was an individual course which was free to take. I'm actually looking at the bigger program. DACFP actually stands for Digital Assets Council for Financial Professionals. And there was a 30-minute course that was actually free to take. And I thought it was fantastic for this group, right? Just to give a high level overview of what the Genius Act is, what it isn't, why it's important, what's driving it, and who's going to potentially, get impacted. So, just jumping right in, Genius is going to reshape global payments. Some of the, fun facts from it or things that I learned from it is that stablecoins right now currently hold 10% of US currency. And it's projected that 6.5 trillion in bank deposits is going to move over to stablecoins over the next 2 years. We Quite a few folks have talked about the elephant in the room is really cross-border transactions, right? That accounts for 195 trillion in money in dollars moved annually. Only 3% of that is using crypto. By the end of the decade, that figure, the 195 is projected to be 300 trillion, and 20% of that is to be using crypto. One thing that we don't think about, or at least I don't think about, is, living in, a first world country like the United States. We have many sources of revenue, right? Many sources of income. But, some other countries, cross-border transmittals, that's their only source of revenue. That's the major source of their GDP. And so what are people in those countries dealing with? Well, they're dealing with unstable local currencies, government corruption, high remittance costs,
Mhm.
And in some cases, there's, I think, over 1 billion people that are just unbanked. And so this is meant to address the target demographic. Related to businesses, 7% of Fortune 500 currently use or hold stable coins. That's projected to go up to 29%, here shortly. SMBs, small mid-sized businesses, 18%. That's going to double. It's already growing rather substantially. I had no idea until I watched this video how much EBITDA Tether generates, which is actually more than BlackRock. So why are companies interested in this? Well, it's incredibly profitable for the stablecoin issuers. So, what's currently in flight? Fiserv is working on a stable coin for regional and community banks. One of the things within the Genius Act is that the stablecoin issuers cannot provide yield. The workaround for that is that companies like Franklin Templeton and BlackRock are already developing on-chain money market funds. What else do we got here? So reserve requirements, cash treasuries or similar liquid assets. I don't know what similar liquid assets could refer to. The cash and treasuries are pretty self-explanatory. So from a transparency perspective, there is, regular disclosures and audits are going to be mandated, and stable coins are not securities nor commodities. So pros and cons. I know George did this exact same course as well. He found this interesting as well. So pros, smooth, cost-effective payments and remittances, clear rules of the road, obviously a strengthening of the position for the U.S. dollar and our treasury markets. So it's going to provide a pretty significant, going to become a pretty significant demand driver here for U.S. capital markets. So the cons. Stable coins could limit decentralization. The reserves themselves could create liquidity pressures in stressful economic events. If there is a financial crisis, there could be a reduced ability for banks to provide bailouts, and obviously potential conflicts of interest, right? World Liberty Financial is issuing their own stable coin. I don't know how that's gonna. It is what it is, right? But that's probably a pretty good example there of a conflict of interest. So
They projected $6.6 trillion will be out of banks, removed from
Mhm.
banks to buy into stable coins. And so that's a lot of money coming out of the banking business. But anyway, yeah, those are good points. Do you know what let's call them guardrails, or who can issue stable coins? Are there federal guidelines and are there state guidelines? Does anybody know that? If there's any sort of parameters
There
coming
are. They're
in?
buried in the bills. I don't know them off the top of my head. Looked at them once, but there are some guidelines, and I think the state level is capped at $1 billion, or something like that.
Yeah.
I don't know, but you have to look at the bill.
Yeah, there are. So to do a federal stable coin by federal guidelines, then the company has to be worth, I think the market cap's 50 billion starting. And so it's that obviously is going to be very limited to just certain companies. Um, and rehypothecating is not allowed in a stable coin environment. I don't believe you mentioned that. Did you, Paul?
No, I did not.
Yeah.
That's
So,
too, yeah.
um, because we know where that gets us. But anyway, um, and I thought that there was a point in the bill that also talked about not mingling those assets with other assets that you take in so that we don't have an FTX meltdown like they did when they were mingling funds. Or was it? was it that Silicon Bank out in California? I can't I can't remember if they were mingling funds as well, but anyway, I do know that I believe that one of the guidelines is they're not that those funds are kept separate and not mingled with other assets. So, um, so that would get us to that point, and then I wanted, and we have extended the call. So I'm gonna ask for Patrick to jump in here for a minute and talk, and then we're gonna lay out what the landscape for next week we hope looks like.
Sure.
So,
So George asked me to get into how stablecoins make money. So I went down this process a few years back when Libra was about to be a project, and I was trying to figure out how they were going to make money. And the exercise is basically the same. Libra was a little bit more complicated stablecoin because they were going to make markets in basically every country in the world, and they were just focused on M0 and coming back. Sure, M0 and M1. But basically is what's their market share capture of M0 and M1 multiplied by the interest rates in short-term money markets around the globe. So that's the same thing with stable coins. If we're looking at Circle, for example, they're a good one because they're publicly traded and you can look at their 10K. They're basically holding they're holding some bank notes, but a lot of US debt as well. So if you look at their reserve fund is called the Circle Reserve Fund. Oddly enough, it's managed by BlackRock. BlackRock is BlackRock's custodian for their Bitcoin fund is Coinbase, and Coinbase and Circle together made USDC. So that's a nice three-way business partnership there. But yeah, if you look at the Circle Reserve Fund on BlackRock's website, you can see the interest rates and what they hold and everything. So it's really just a scaling game where how much assets can you hold, how much can you invest in those treasuries, and then that's just the interest rate you earned. And Paul touched on Tether for a second. Yeah, I believe they're making like $68 million an employee or something. Yeah. The guys when they put in the baseboards and I guess they tower. Okay. Sorry about that. So they're making like $68 million an employee, and it's just off float. And if that sounds like another type of financial institution we're all familiar with, it should. That's what banks do, right? Net interest margin.
yeah.
They're different from banks, as you alluded to, George. Banks can hold client money and commingle it. They're the only financial institution that can. Everybody else has to have it in a separately managed account. So it is somewhat safer. They also make money in other different ways, but they're far less important and far less amount of money. Like when you mint new stable coin, they charge a fee for that. When you swap from either from the underlying like USD to USDC or to another stable coin or whatever, there's a fee for that as well. Some of them lend, so they earn that way. That's a little bit less popular, especially if you're at scale. You can just sit back and clip coupons. So why would you lend? But some of them obviously will. And that's really how they make money. And that's a super high level. So how can you make money as an investor in stable coins? Well, just holding a stable coin is about as good as holding the US dollar, which is terrible. At your best, your very best, you're going to lose 3% per year, which is, the stated inflation rate. If you believe that, it's probably worse if you look at the actual money supply growth. So holding stable coins is a terrible idea over the long term. So there are other ways that you can lend out your stable coin on certain platforms that you can make money with, and pretty good money at that. The risk there is who is your counterparty. It's not just the platform; it's who the platform counterparties are as well. So who are they, using your money to borrow your stable coin and borrowing out to? Who are they lending to? Why that's important, and it's the same thing in banks, right? It's sort of like a new version of fractional reserve banking, and you'd have to look at their governing docs to see how much they can hold on reserve and how much they can lend out. But typically in banks that have zero reserve requirements, just a small change in asset prices will wipe a bank out. So, a 10 to 20% drop in prices of the collateral will wipe a bank out. Same thing with someone who is potentially lending this out. I don't know. There's a lot of people in here who've been in crypto for a while. There have been a lot of these sort of lending platforms around, and most of them have gone belly up because at one point or another, they've gone one bridge too far and they've gone for that really big client that then they had problems with and it wiped everything out. So yes, you can make money with stable coins, but just be careful.
What's
I'll
up,
leave it
Doug?
there.
Anybody else want to chime in? I was going to make a couple of comments.
I mean, I think it's interesting that that obviously it seems like the Genius Act is going to work around with Tether, right? Like Tether will be able to continue to operate, and that's still one that's had a finding from the Attorney General in New York, right? Like, and I think there's a lot of concern still in the like Bitcoin, like large cap Bitcoin community. It's something that's going to happen to Tether, because it's interesting. How is Bitfinex, which is an exchange, making $68 million an employee off something like float, and we know that it's because part of that is that they're not holding they're not whole. Originally Tether was saying like there's a bank account with $1 for every Tether. We know that that's now been in more stable transaction. Like that they're holding bonds, and there's some question because all of their audits always come back weird that they're going to be that asset. There's some questions about how it's going to be back. So I think it's going to be interesting the next few years as some more of these roll out, whether people go a little bit more like the USDC route, where they're highly regulated and there's a bank account that the SEC can essentially very much look at, or whether how much gray area we're going to allow in the stablecoin community, because the largest stablecoin community, and I know the Bitfinex guys, they're in Taiwan, where I used to live, so I know a lot of guys at Bitfinex. It's going to be, I think, an interesting time to see with the new regulation whether that actually gets the stablecoin community to clean up, because I think we are seeing that these are important assets that are in the crypto market to allow for people to hold money for short periods of time, to transact money, to move money across. I mean, that's been the biggest problem, I think, in things like trying to handle transactions with something like ETH or Bitcoin, which is, by the time I get it, it might be worth considerably less than when you sent it. Though, hopefully we're seeing like a lot more stability in the crypto backed coin. So I think it's going to be an interesting time. I for one, think I'm probably different than a lot of people in this. I think the regulation in this market is going to be fantastic for it, right? I mean, we shouldn't have, coins that are referred to as stable should not be able to bring down entire exchanges because they're suddenly not stable. That should be something that becomes increasingly rare.
So the big net. Go ahead, Jerry.
Well, I think part of it is with Tether. I think if they want to operate in the U.S., they're going to have to be regulated by the OCC, and they're going to have to comply with the rules that are in the law. If they don't want to operate in the U.S., they don't have to, of course. And so I think in the end, that's what they're going to do. I don't know. I mean, but I think that's the choice they confront, because basically the SEC is not really the regulator. State banks can be regulated, small ones can be regulated by a state regulator if the laws allow it, which I don't think anybody does at the moment except Wyoming. And then the larger banks are all going to be regulated by the OCC, and they'll have bank charters. But then you can have financial firms like Circle doesn't have a bank charter actually, but it'll be regulated by the OCC. And so they're going to have to file regular reports with their assets, just like banks do. And they'll be audited. And so Tether's either going to have to clean up its act a little bit, or it's going to not
Well,
operate.
Tether's already had to clean up their act, right? Like Tether's already been fined quite heavily by a few years ago by New York State, right? That's there is. It's not like a hypothetical that Tether was not doing what they were supposed to be doing with their assets, right? That's like they
No, but
went through. They've already been pegged for not doing it right.
and
Now,
there,
in some ways, that's been good, right? Because they say now we've cleaned up our act. They're doing regular audits. Like they paid the fine. They've moved on. And they may very well be. But I think it's been interesting that, I mean, even actual banks that are regulated, outside of crypto, we keep finding, like JP Morgan's been hit 4 times or something by, but for opening up large banks for the cartel. So there's
Probably just this year.
Yeah, exactly. There's going to be some questions to the effectiveness of our current regulations in something as high transactional frequency as crypto. Tether is now fulfilling more of their paperwork obligation, but I don't think like the crypto market. I don't even know if there's an option for the crypto market where Tether suddenly doesn't become, allowed to operate in the U.S. Right? I think there's been a lot of pressure from the crypto community into the government because of that. Because I mean, like if you look at how much Tether just Binance holds on a day to day, if we were to find out that they didn't have the money, what would that do?
So Tether's still an offshore. Sorry, go ahead, George.
No, the guy from Tether, the CEO, Paolo, whatever his name is, has done numerous interviews where he's agreed to comply with all of the Genius Act requirements, which is accounting. There's monthly accounting, there's a review, the whole thing. So he's golden in terms of what he says.
Oh yeah, this is the same guy that told us there was a bank account with all the money in it, and there wasn't.
Well, that's okay, but
this is a guy we've established
to comply and
has lied to us before.
So we'll see. But I did want to just jump into because we're about at an hour, which is extremely unusual for me. Anyway, I got to go get some bread. But anyway, and that could be taken both ways. But anyway, I do want to set up next week, which I asked Michael Allen, who's affiliated with Bank Social, which is a crypto centric development company that works in the credit union space, and asked if if they are doing anything with stable coins and credit unions. And Michael reached out and they said, absolutely, we are. And they've got a number of videos that are on their YouTube channel where they're talking about what they're doing in that space. So we're going to ask the CEO from Bank Social, and Michael's going to set it up to join us next week. And so we're going to talk about actual use cases where people are doing stablecoin transactions in a banking environment, that is credit unions. So hopefully I'll have joining us, it was going to be Victoria she's from the Innovation Sandbox project in North Carolina. She's interested in this conversation because that's what she's doing, is developing sandbox projects in DeFi. Anyway, so that's one person. Then I'm hoping to get the banking lobbyist for South Carolina Banking Association to join us as well, so you can kind of hear what's going on and we can learn from him as well. So I'm pretty excited about next week in terms of what we're going to be doing. We've got a bunch of events coming up. Fred's AI on the 28th. Dennis has got his Legal Jazz Club going event coming up. Dennis, you want to speak about that for 2 seconds? And then we've got Jennifer's going to join us to tell us a little bit more about the Robert Smalls event. So Dennis, I don't see you unmuted yet.
Yeah, there you
Jennifer,
go. Yeah.
You going to join us too?
Yeah, the event on the 28th is the second in our Tech and Law series seminars for CLE if you're an attorney. If you're not, it is a free event to attend. This one you will have to be present to attend. There won't be a Zoom link for this. So this will be a live event. We're going to be hosting a dinner the evening before with John Deaton and Emma Channing, our two panelists, as well as John Dunsmore. So it really, the concept here really is obviously this is so breaking new ground across the board, and obviously with our report AIBTC, that changes a lot of the dynamics of what we've been talking about, given that there's nobody that's really contemplated a state-owned publicly data center, a sovereign AI data center. So how that impacts the legal community on algorithmic governance, all those things are really the topic, and that's why we use the Jazz Jam as an example. Basically we're putting two divergent legal scholars into the room together with Jonathan actually sort of moderating that. I'll introduce everybody. Jonathan will moderate, and then we're really going to kind of throw it out for conjecture on how this report impacts governance at
And
the state level.
and
So
when is that again, and where is it?
yeah, that's August 28th. That'll be at
No,
the law school,
yeah, that's
moot court room. Yeah, and that'll
okay.
be, we'll kick
Is
off
it?
at 7:30 with a little continental breakfast, and then we'll kick it off obviously promptly at 8. It
Got it.
wraps up right at 9 a.m.
Got it. Okay, and then Fred can join us at 2. So okay, those time frames don't
Busy
conflict
day.
with each other. That's great. And Jennifer, I see you're on the call, but I see you're muted. Do you want to give us an idea of what? No, you take it away, Jennifer.
Hey, good morning, everyone. Thank you, George. So we are hosting the Robert Smalls Economic Freedom Forum here in Columbia on September the 18th, which is a Thursday. It will be from 5 to 8 p.m. at Stone River. And this event is designed to highlight how emerging technologies, particularly blockchain, tokenization, AI, and digital tools, are already being deployed in South Carolina and beyond to support economic resilience, transparency, and growth. And we're doing that in collaboration with the South Carolina Emerging Tech Association. So we have a great list of panelists, and our keynote is going to be Representative Brandon Guffey. And we have some more of our legislators that will also be a part of the program, and some great people that are within the space. And we have information will be coming out about that and begin marketing tomorrow. So
Oh,
George,
great.
I get that information to you, and
Yeah,
if you can, get it out to start sharing it.
absolutely.
But
That's
yes.
great. There'll be a small fee to attend, right? But
Oh yes, I forgot about yes. So $50, and then but we're doing an early bird for 40, and we do have
excellent.
some sponsorships available,
Um,
and that information is going out today as well.
awesome.
Yeah, and George, let me just jump in. Saturday evening, we're the diamond sponsor. Skeet is the diamond sponsor for the Dorchester County Republican
Great.
dinner and speaker event. We have I think maybe one slot available if anybody's interested in joining us for that event.
Thank you so much. All right, that's great, everybody. Listen, it's only 3 more weeks or so. Maybe it's even 2 weeks before football starts. So we're all excited. We got to move in of the youth
Yeah.
students here at the university, and they're doing that up in Clemson this weekend too. That's why Neil's not with us today. But I'm going to end this baby, and I'll talk to you all next week. So thank you so much for being with us.
Bye bye.
Thank
Bye
you.
now.
Bye.